Hello, and
Hello. Yeah.
and welcome to all who have joined us for this interview. This is part of the Cambridge Judge Business School video series, CJBS Perspectives, Leadership in Unprecedented Times. And in our previous interviews, we have taken the unprecedented times being today, but today we'll talk about something unprecedented that happened 30 years ago. So thank you everybody for joining us. I'm Christoph Loch. I'm the Dean of Cambridge Judge Business School and the Professor of Technology and Operations Management. And we are really honored to be joined today by Wang Boming, the President of the Stock Exchange Executive Council, SEEC, the Chairman of the SEEC Media Group, and the Editor-in-Chief of CAIJING Magazine. And in case you didn't know, the SEEC is the organization that executed the foundation of the stock exchanges in China, in Shanghai and Shenzhen, 30 years ago in 1990. And Wang Boming was a key member of the small group of people who actually did this. So we are very excited to have him here. Before we begin the interview, I really want to express my sincerest thanks, Boming. Thank you very much. And also thank you for being a longtime supporter and friend of me and the school, and you're a member of the school's China Advisory Council that we launched in 2014. So thank you very much. It's great to see you, and thank you for taking the time. So maybe a good way to start this interview is, I know that when you did this, the opening had begun under the leadership of Deng Xiaoping. However, this was still a crazy undertaking, and I know that many people said to you that was impossible. So what motivated you to go for something where people said it's impossible, and to create these stock markets in 1990? Well, why did you even try to do this?
Okay. Well, correctly, it's 30 years. Actually, it's next month, December. Both Shanghai and the Shenzhen stock exchanges, they just opened up for operation. So December, 30 years exactly. You say it's a crazy idea. It is. I mean, it's very crazy. And some 30 years ago, you have to understand where China was. Because China started its economic reform back in the end of 70s, 1970s. Actually, it's 1978. It was at the time, 78, China was a planning economy. We don't have private enterprises. Everything is planned. I mean, so when we started the economic reform, as to where we were going, actually the central leadership didn't have a clue. The only thing they know is if we continue what was back in 70s or 60s, it won't work for China. We just we're going to be in poverty. I mean, I was making like $30. I mean, like 5 or 6 pounds. I mean, a month. Then we started the economic reform. But the whole process was really hampered by the ideology, just planning economy was like, under the Marx, the Capital, Capital, the 3 big books. I mean, so everything has to be socialist, has to be, everybody, every enterprises were state-owned. But, I was studying in the United States, graduate from Columbia, and but I was every day at the time, I was excited by the process that, transition of China's economy from a planned one to a market oriented. I mean, not really fully market. I mean, we're building up every markets like labor, raw material, and some only very scattered companies will turn themselves into a shareholding company. So you ought to have a really good market. You need a capital market. I mean, the capital has to be allocated not by planned, institution. In China, we have a ministry. It's called Planning Commission. They plan everything out. So then I went to work for New York Stock Exchange. I mean, that was like a first Chinese. I mean, working there, Asian person working in the New York Stock Exchange. And at the time, roughly 87, it was the crazy idea came up. It's really, our chairman is called John Phelan. He visited China, and he was met by Deng Xiaoping, our paramount leader. Then during the conversation with John Phelan, then Deng Xiaoping said, well, in the United States, you had a stock exchange. He said that in China, we can have a stock exchange as well, So that news really very fast. I mean, got to United States. I mean, I got to know that through medias, So that got us very excited, and the couple of guys. I mean, that we were together working in Wall Street. Second thing is really, what 1987. I was working in a New York Stock Exchange. Then that October, the market crashed, like 23%, I mean, a drop in the index. Then we were really called to the embassy, Chinese embassy. Then they want to know, I mean, what's going on? Just those ambassadors, consulars. Then later on, we were told it's not really them that wanted to know what happened. It's really the highest leadership from China. They want to know. I mean, is that going to have an impact on China?
Yeah, and what are we getting ourselves into, right?
Yeah, right. I mean, so we went there. I mean, it's a big, all the Chinese enterprises, medias, they were all there in the consulate. So we told them what happened. I mean, they just want to know. Then they say, the impact on China, that got to me thinking that that's what happened in the United States. How could it impact on China? So that got me into thinking. The stock market is significance to the transition economy in China. So that's a second thing. Then the third thing is really a group of Chinese reformers. They are enterprise from SOEs and also some officials, financial guys. I mean, the governors from central bank, the People's Bank of China. They were there. I mean, very reform minded guys. I mean, they went to United States. We had a talk, quite a few talks, and they say, we need Wall Street. We need stock exchange. I mean, but somehow in theory, they know what is needed. I mean, but to the facts are actually how it works, how it is set up. They didn't know, So they need us. So they talk to us. The couple of guys are working on Wall Street. They urge us to go back to China. To participate in this crazy and great endeavor. So that's how I got the idea, just so to go back to China with a group of Chinese students working on Wall Street.
Okay.
So is that good enough answer for you?
Oh, I'm impressed. You had a big idea and a spirit, and so you came back to China to do something big.
Oh yeah.
Yeah. So now, so you had the blessing from Secretary Deng and from some high-level people, but still, this was a huge, huge challenge, right? Because as you say, people didn't really understand how this would work, right? Then you have to put many, many pieces in place, so this actually all fits together. And you said people understood that they couldn't continue as in the past, but still, you are introducing the antichrist, the symbol of capitalism into an economy that is, just making the transition. So this was a huge challenge, and this must have been very gutsy. So, but in hindsight, what was the hardest thing? What was the hardest thing in all of this complicated system that you put in place?
Okay. Really, the hardest thing is although the central leadership, it's not everybody in the central leadership is on the same boat. On the same page. They had a feeling that there's something that could help China economically, but you have to understand the 80s. 80s still we have such a stronghold of you talk about market economy, you will be criticized. You talk about capital, you will be criticized. There's let me tell you a story that when I came back, there is a crazy reporter from New York Times. Actually, he was my friend. He did an interview with me. Then I was very careful. Not to say much, but he put an article onto the New York Times saying, me and a couple of others from Wall Street, they want to turn China's economy into a capitalist one. That almost killed me. Because, if you argue for privatization, you argue for private enterprises at the time, 1980s or 88, you will be in trouble. That guy, really got me into trouble when, I first come back to China from the United States. So the hardest thing is to get everybody on the same page. I don't just remember how many reports. It's, I think, a couple of meters high. Pile of reports we have to write to justify. So this capital market, there are a lot of questions, rudimentary questions. We have to cite, a little bit in the big book, Marx, Capital, that book. We try to convince the central leadership that, what we were doing at the time, were in the same page as Marx. Marx says shareholding system is a good thing because in the United States, they could raise massive capital, so they will have a railway, the transportation, you know, a single capital versus massive capital through shareholding. That's a way of raising capital, you know. So that's a harder thing, you know, when it comes down to actual preparation for stock exchanges. That's well, I wouldn't say easy, but once you have that blessing, everything else we could manage. But there's one thing that we cannot manage is really to get approval from the central leadership. I mean, you know, I have to tell you another story. You know, when we say when we first set up Shanghai and Shenzhen, they call it securities exchange. Then we're really afraid of using the word stock. You know, when you use stock exchange, you know, people then had the thoughts that it has something to do with you know, privatization, exploitation, you know, the capitalist, you know, this and that. I mean, that's something that we don't want to have, you know, in our, you know, the process of arguing a good capital market.
Okay. Wow.
So that's the hardest thing, you know.
Yeah. So you became an expert in Marxist theory as you justified the stock market or the securities market.
Oh yeah. Well, you know, we have to write, you know, a small comic books. I mean, in the simplest terms, to explain what stock market, securities market is all about. You know, because I still remember in one paper, we explain what the stock market is. So we say, so there is a market for vegetables, the pork, you know, supermarket. I mean, we didn't use a supermarket because in China, we didn't have a supermarket back in the 80s. But the market that sells vegetables, so you know that, right? Then the leadership, yeah, okay, that I know. Okay, what we're saying, we're having a market that sells securities, the price. So do you understand that? I said, okay, well, somewhat. I mean, so, you know, you have to use the simplest terms, I mean, to explain what it is, you know.
Yeah, and you know, and there's nothing wrong with that. Okay, very interesting. Now, so the argument was that you were doing this to actually support the transition and benefit the country, right? And so, you know, now looking at it 30 years later, you know, what's your reaction now? So would you say that the stock market has created value for the Chinese people? You know, and I don't mean valuations of the stocks in the stock market, right? But so how would you characterize the value that the stock market has created for the people in China?
Wow, tremendous. For one thing, I mean, the market in the West, in Britain, you know, the stock market is a simple thing to raise capital, to have a secondary market, to have a stock traded. But in China, it carries a lot of meaning for China's economic reform, particularly in the, you know, it's back in the 1990s, Shanghai, Shenzhen stock exchanges, they opened up for operation. At the beginning, for Shanghai, there are only 8 stocks, 8 companies listed. In Shenzhen, there were only 5. So today, altogether, there are 4,000 listed companies. The market cap, I think now it's like like 11, 12, 12 trillion US dollars. I mean, it's big. It's big. I mean, it's a second to United States. I mean, for all the companies, they have raised some 11 trillion US dollars worth of, US dollar denominated in US dollars, the stocks. And for bond, another close to 10 trillion US dollars. So a lot of capital was, created, the capital formation created. But most importantly, it's not really the capital itself. It's really the system that, from a transition economy, from the planned economy into a market-driven economy, the capital is distributed through market. I mean, I think that's a very big thing. I mean, so China, 30 years ago, 80s, it was not a market economy. I mean, it's I call it quasi, semi-market economy. 80s, 90s, quasi. I mean, we don't have a corporate law. We don't have a securities law. But we created market first. I mean, let it evolve. So a lot of this, just wealth is created in China. Another thing is really, back in 80s, 90% of our enterprises are SOEs. I mean, state-owned. So now, as of today, the private enterprises, as reflected by listed company, most of them are really privately owned. They raised a lot of capital, so they developed. So today, we have, for private enterprises, we have we call number. It's like 5, 6, 7, 8, 9, which means that for tax revenue for the country, private enterprises, they contribute half, 50%. For GDP, private enterprises, they contribute like 60%. For technology, investment, for private enterprises, 70%. For urban, employment, the private enterprises, they absorb like 80%. For newly, coming into the labor market, the private enterprises, they absorb like 90%. So now that you do have a private sector, that's meaningful, that's big. I mean, that's good for the country. That's good for the system. That's different from what it was. I mean, in 70s or even the beginning of the 80s. So now we have a full-fledged, market economy. I mean, which we couldn't say. I mean, back in 90s or 80s when we even started to build up the Shanghai and Shenzhen stock exchanges.
And you would say that this has created well-paying jobs for more people than you had before?
Oh yes, I mean, because every year now, for the the university graduates, and this and that, every year, private sector, they absorb 90% new laborers coming into the market. So that's good, because just SOEs, they couldn't do it. I mean, they couldn't absorb quite a bit of the new labor force. I mean, it's a private sector. Yeah. The equity market helps a lot. They help them to, get the capital they need, So that's a situation now.
Yeah. Okay. Yeah. Thank you. Now.
Of course, I want to add one more thing.
Mhm.
Back in 80s and 90s, even in the first 10 years of 21st century, we didn't have wealth. I mean, we have enough to feed ourselves, to clothe ourselves, you know. But now we do a lot of wealth is created. I mean, so equity market serves the function of some wealth management function there. I mean, that's a byproduct of I think the capital market.
So,
Okay.
Boming, are you going to celebrate this momentous anniversary? You said it's next month. So, are you going to celebrate this in any way?
Oh yes, I mean, actually, the whole country is celebrating this 30 years of equity markets formation. All the medias, they're excited. They're looking for the guys, the old guys. I mean, the first movers and shakers of Shanghai Stock Exchange and Shenzhen Stock Exchange. Too bad some of the guys they're not here anymore. I mean, but they were there 30 years ago. So we're going to do a lot. I mean, to do interviews. I mean, to dig out those guys. The 30 years ago they contributed to the formation of China's capital market. Then, of course, the Sanya Forum you're going to miss. We're going to have a ceremony over there because that's December 12th. That's roughly, Shanghai Stock Exchange is really set to open up in December 16th. The Shenzhen, December 1st. So we're into the month, really exactly some 30 years ago that we have this China's capital market. So we're going to have a party together. We're going to award, we're going to award some of the guys. I mean, that did much to the growth of China's capital market. So we're going to have some quite a bit. I mean, to celebrate the 30 years of China's equity market.
Okay. Now, so as you now look at the Chinese stock exchange, and sometimes people say, China has its own management and its own capitalistic system. So, how would you say that the Shanghai Stock Exchange nowadays is kind of the same as the New York Stock Exchange? So is it the same, or is there actually a difference that expresses that the Chinese capitalistic system is different from the US capitalist system?
Well, if you talk about the technical aspect of New York Stock Exchange and the Shanghai or Shenzhen, NASDAQ, they're pretty much the same. We have a regulatory body that governs the IPOs and after the market. We do have laws prohibiting irregularities of trading in the market, this and that. But in a bigger picture, the difference is really, well, we're not a fully market economy. I mean, we do have a chunk of SOEs, I'm talking about the numbers out of like 3,000 listed companies. Most of them are really private enterprises. But if I talk about the capitalization, or if I talk about the total profit generated by listed companies, I think the SOEs, they generate, they get a bigger chunk. I mean, 60%, probably 70. I mean, talk about just that five or six state-owned banks. They are SOEs. We call it China as a market economy with Chinese characters. So that's for the marketplace in this, it's different from a free market economy in the United States. So there's a difference there.
So, would you say that the fact that you still have so many large SOEs,
Yes.
is that shackling the stock market and therefore just negative, or would you say this has also positive sides? Just out of curiosity.
Well, it's been, but back in 90s when we first had the equity market, basically you have 100% SOEs. But now, private enterprises, they get a take of like a 30 some more percent. It's better. It's better than, what it was. I mean, back in 90s, even 2000s. That's what China is. I mean, it's by definition socialist economy, of the market economy with socialist characters. It is. We have a big chunk of SOEs. They do command a big chunk of economic activities in China. So I think people are used to it. And also, even I think international investors, they are used to it. I mean, it's been some 20 years minimum to trade on the shares of SOEs. They were big, somewhat in the sector of monopoly. I mean, so they have a good profit. They have a good, some of the SOEs, they have a good growth.
Yeah. Okay. All right. Yeah. Thank you. Now, let's turn to the future for a second. With all, you have had huge success, as you described. Now we have global challenges, where barriers are being erected. How does that affect the stock market? And where do you think the Chinese stock market will be maybe 5 or 10 years from today?
Okay. Christoph, let me say, in short term, the pandemic worldwide, there's a lot of countries are experiencing the negative growth. But for China, we're coming out of this. In the third quarter, we're experiencing the positive growth. If you sort of look out into next year, it's going to be nice growth. The equity market this year, actually today, the market stands on a high note. So it's in quite a while, it stands on the index 34,000. So the market is experiencing the better than expected results. Well, if you talk about long term, I think the biggest thing is really depends on how the Chinese economy is growing. and how the Chinese equity market is internationalized. Um, I can still remember that the back in 30 years ago, we couldn't imagine, you know, the current size, second to United States. I mean, actually, in quite a few years, Hong Kong, mainland China, they raise more capital than Wall Street. So, in terms of funds raised, I mean, it's bigger. Now, there was, I still remember, there was 1 year, the biggest fund raised globally. Number one is Hong Kong. Second one is mainland China. Third one is Wall Street. So it's sizable now. I mean, but for mainland China, it's not internationalized. I mean, that's different from, let's say, New York Stock Exchange or NASDAQ, because the US dollar
One of the
is.
biggest export nations now, right? China is one of the biggest export nations in the world, right?
Oh, yes.
So you depend on the world markets.
Yeah. So the biggest thing happening 5 to 10 years from now, I wouldn't be surprised that China will become once its RMB is internationalized. I wouldn't be surprised that it's going to be a financial center for the world. I mean, I wouldn't be surprised the software. Microsoft, let's say, they get a listing in Shanghai Stock Exchange. I wouldn't be surprised that, let's say, Facebook, they will delist from NASDAQ or New York Stock Exchange and come to China to raise capital. I mean, so China will become a financial center. I mean, so that wouldn't surprise me when we get into this stage. But most important thing is really we have to continue our economic reform. We have to continue our open door policy. Our economy has to be intertwined with the international economy, and also the trade, finance, just we have to be interactive with the international economy. Then by that time, there will be a day that RMB will be globalized. I mean, once that's globalized, then you wouldn't be surprised. I mean, China will become a world financial center 5 to 10 years from now. I mean, not now, not today.
Yeah. Okay. Wow. So in other words, the incredible ride is with some likelihood going to continue. That's very exciting.
Yeah, well, I think short term, the momentum is there. I think this year, well, the export is doing well. I mean, I'm surprised. And the other sectors are coming back. I mean, the domestic consumption is doing well. The investment is doing well. I mean, so I'm somewhat optimistic into next year.
Okay.
Of course, we have a lot of other issues, challenges. I mean, that we have to deal with, but that has to be done through various economic reform measures. As long as we do that, that the bright future will be there 5, 10 years from now.
Okay, I think that's a great way to end. We are at the end of the allotted time. So Boming, thank you very much. This is fascinating, the story of what you had to overcome and your assessment of where we are now. So thank you very much.
Thank you.
We are very grateful. So thank you to everybody who was here with us today for participating in the CJBS Perspectives Leadership in Unprecedented Times. As always, a big thank you to all the alumni and the other members of the community of CJBS who have joined us. And Boming, thank you very much again. This was really, really fascinating. Thank you.